Hey, Steve Conwood here, your mortgage guy. You've probably all heard about the chat bot, the AI thing, ChatGPT. Well, I thought I'd sign up for that, and I put in a couple of questions. One of the things I asked it was, give me some intriguing topics regarding financing a home. And it's one of the things it came back with and said, define the role of the housing market in determining the value of your home and your ability to sell it in the future. And that kind of is intriguing because the housing market around you, the surrounding market, is what defines your value. It doesn't matter if you think your house is worth $1 million, if your neighbor with the same house, same kind of interior, same size, same age, pretty similar house sold for $500,000, that means your house is probably worth $500,000 or somewhere around there. That was part of the problem with the housing market. A year ago when rates were insanely low, people were willing to pay a lot more for houses. So a house may have been going for 485, but somebody came in there and said, hey, I'll pay you 550 for this, or 540, whatever it is, or 585. It was crazy. And the problem was that you would go to finance that house at 80% loan to value, and they're putting 20% down. 20% of, say, $500,000 is $100,000. But let's say that a house came, instead of appraising at this higher price, the 500,000, let's say it appraised for 550. Well, 450. Well, 80% of 450 is $360,000, but you agreed to pay $500,000 for it. So that means you need to come up with an extra $40,000 in order to make that house 80% loan to value, because the loan to value, according to the bank, is the appraised value or the purchase price, whichever is less. And if that appraisal came in less because the surrounding housing market defined that as the value, then that was what you could finance, 80% of the appraised value, even though it's less than you had agreed on. So the housing market was going so quickly, people were getting so excited about buying new houses and spending whatever they had to get the house, that the comparables, the market in the area, didn't have time to catch up. So maybe that same house a block over sold for 485, but then you come in, the next month, and it's a bidding war, and it ends up selling for 550, going under contract for that. Well, that doesn't define value until it's a closed sale. So it doesn't really matter that somebody is there with their checkbook in hand, willing to spend more than the market has shown it's worth. What matters, at least to underwriting, to Fannie and Freddie, what matters is what other houses have sold for, and that defines the market value. So thanks for watching. If you have more questions about your house value or anything, go ahead and reach out to me. My info is in the bio. Have a great day.